We had a small little inefficiency in here. Didn't quite get filled. We did trade up into an area we'll look at a lower time frame. We were expecting to see a reaction at anyway. But price is now trading softer. A lot of wicks in here. So again, this is probably going to be a high resistance liquidity run going lower. If we can get below this swing low right here, I think things will pick up with momentum on the downside. Meaning that we'll probably see large ranges with down closes after we get this low here taken out. Until then, it's going to be a slow crawl. There's a lot of price action to trade through. Now, it doesn't mean that it can't just slam right through that. It would be great if it did that, because that would be very productive for my bullish dollar stance. Let's go down to a lower time frame. Here's that same chart we were looking at last week. I mentioned the distinction between an inefficient move and an efficient move. Okay, so this is much more efficient, meaning there's a lot of back and forth price action delivery. And price is going to have a hard time getting up here. But if it did, we would be looking for that breaker here. We got it, and we had one more time, hit it here on Friday, and then sold off. We dropped down into an hourly chart. We have these equal lows here, and I believe I sent a tweet about this. I had a little hello sitting there. Below that, we have these relative equal lows here. So we have 2 points of liquidity that are going to be of interest to us this week. So this could be a downside objective for a short. And then we have these relative equal lows. Obviously, it looks like it's not equal because we have this and this lower. But again, we're focusing on liquidity pools. There's an absence of any real inefficiencies going lower because it's all pretty much efficiently delivered on the upside since February 15th. Looking at cable, we had our buy side liquidity pool ran out here. We've been looking for months. Finally came to fruition last week on Wednesday. Thursday we gave up the ghost. Friday we traded back down. This close above the bodies of these candles in this swing high here are a little concerning for me. I don't want to see it rally from here. I'd like to see it just reject and trade aggressively lower. I like this series of 2 down close candles on the daily for cable because we have a small little gap in here as well. So I like this as a downside objective on a swing basis if we can continuously move lower. So that's something to look at, and it's also a sell side liquidity pool or sell side liquidity. So we could see something trade down there if we really roll through. Now, if we start to consolidate in here, we'll probably want to make a higher run on cable. Just be careful with this one. I would counsel you to just study this one in here. Don't try to trade it because it can bite you and hurt you. So that leaves us with what? A very difficult short on Eurodollar. A mixed bag on cable. So this is the reason why I rung in the dollar CAD this week. Dollar CAD on a daily chart, we have all of the inefficiencies noted here. If you go down to lower time frames, I'll leave this for a study for you, but we'll talk more about it in the teachings for the price action drills for institutional order flow. We'll actually be using this currency pair for that study. But I have these levels here already in the chart, so if we get what I'm expecting to unfold over the coming weeks, these levels will be more significant and salient at that time. So we had a huge rally on dollar CAD last week on Friday, trading off of a bullish order block in here. Yes, it's hindsight. Yes, it already happened. But it's helpful to us because now we can go into price action in here and justify anything going further on the upside. Let's go down to an hourly chart. We had several highs rated in here, and I like this high right here. So if we can keep above that level here and trade back down into the order block here, so we have a breaker, bullish order block, price can come back down in here and hit that. Now, it can still drop only to this price point here, fill this void, and find some support at 32.50 or 32.52 in that area, and then look for continuation on the upside. So we'll be watching those levels this week, and that's about all I have on the radar for now. I do want to talk about the time of day briefly. I add these levels on Ava Trade. Okay, and these levels are important later in the into the mentorship, because I teach you more concepts around true day. I teach you the standard deviations for flout, central bank dealers range,